Welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends, and most importantly, your queries during the course of the show. So guys, keep the comments coming on our live feed and we'll have them addressed by our guest on the show. But before I bring him on board, let's see what the global handover looks like. Wall Street saw a volatile trade with Dow and S&P closing higher. Nasdaq was flat, however. As far as European stocks are concerned, they also closed higher yesterday. This is despite fears of a slowdown in global economic growth. Traders digested a deluge of earnings. Stocks across Asian markets right now trading mixed. All eyes on Bank of Japan's monetary policy. As far as the Indian market is concerned, based on SGX Nifty indicators, it looks like we're going to have a flattish open today. And coming to individual stocks on the earnings front, we have Axis Bank, Bajaj Finserv, Ambuja Cements and Vedanta that are all set to deliver their earnings report. What's trending? Insurance stocks, definitely ahead of the LIC IPO launch next week. And of course, we also have SBI Life results today. So to help us understand what exactly is happening in the insurance space, which stocks should you keep on your watch list, Neha Dave joins us from MC Pro. Hi Neha, thank you for taking time out and chatting with us. I know you're having a busy day. You're tracking the LIC IPO, there's SBI Life earnings as well. But why don't you help our viewers understand the latest trend that you're witnessing in the insurance space, especially now that LIC, another behemoth player, the biggest player rather, will be entering the market, entering the listed space. What should you expect in the insurance sector?
So the trend in the insurance space has been very healthy of late. There are two largest private life insurance companies reported their earnings. The first one was ICICI Prudential Life, great set of numbers. They have delivered on margins, one of the highest VNB new business margins they reported. They are also well on track to deliver or double its value of new business as they had guided earlier in FY19. So a great set of numbers from ICICI Prudential. HDFC Life also reported very strong set of numbers yesterday, and again it has delivered on most financial parameters. It has a balanced product mix, very high margins. It is enhancing its distribution channel. So a great set of number from both leading private life insurance companies. As far as the trend is concerned, what we have seen in the last 3-4 years, and that is the most encouraging part about this private life insurance companies, is they are focusing more on high margin products. For example, protection business. Now this business has grown for all private life insurance companies in the last 4 years. And this is the product where there is ample of scope and opportunity for growth. If we talk about life insurance space in India, the story is all about protection business because of the glaring underpenetration. The protection gap in India is around 83%. So there is a huge opportunity and huge scope to grow the protection business in India. As far as LIC is concerned, LIC is obviously the market leader with 65% market share in the new business premium. But as far as the protection business is concerned, their presence is very small. And that is where the scope lies, It can change its product mix, post its listing, and improve on its margins. And this offers a lot of opportunity for investors.
Okay. But, the big headline that everybody was talking about was the fact that government has revised the price band. It's come down to 902 to 949 rupees a piece. So in terms of valuations, in terms of the pricing that they have finally come down to, what is, MC Pro's verdict? What is your assessment of it?
But the valuation is the most attractive proposition for LIC's IPO. At the current pricing band which government has announced, it is pricing the insurance giant at around 1.1 times its trailing embedded value, and this is like very attractive. Yeah. Now, when I say very attractive, you compare it to the listed private players. Most of them are trading at more than 2.5 times their embedded value. In fact, HDFC Life is trading at around 4 times. Its embedded value for FY22. Now, this is very attractive proposition. No doubt, LIC LIC's VNB margins, or the new business margins, as we say, is at 9.3% as compared to private players, which are all about 25%. But there is a scope for improvement. Embedded value also will improve going forward, as there is a profit sharing arrangement which will change from FY25 onwards. So it's a great valuation at 1.1 times. It's a very attractive proposition. It leaves a lot of value on table for the investors.
Okay. So clearly it looks like it's quite attractively priced as far as LIC is concerned, but in the existing space, in the listed space, whether it's life insurers or general, the ones like ICICI, Lombard, etc. Tell us about which one do you like right now from the existing companies? Are there any stocks that MC Pro is optimistic on?
Yes. SBI will be reporting numbers today. We have to wait and see what kind of numbers the company report. But as far as ICICI Pru and HDFC Life is concerned, we like HDFC Life because of its, the market leading margins and its great set of numbers. But the problem with HDFC Life is that its expensive valuation. And precisely for this reason, the stock has underperformed. If you see in the last 1 year, massively underperformed the benchmark. Now, that is precisely because of the valuation. But if we talk about ICICI Prudential Life, the valuation is also reasonable and the business is doing very well. Most importantly, and the encouraging factor for ICICI Prudential is that it has delivered on whatever it has guided so far. It had started a business transformation process some 4 years back. And we can see the results today in terms of business transformation. ICICI Prudential has a more improved product mix, which is leaning towards protection business. Its margins have improved phenomenally. Its value of new business margins is around 28%, and it has improved from single digits since 4 years back. So, it is also enhancing its distribution channel. There is the dependence on the bancassurance, especially with ICICI Bank, has gone down, and the distribution channels and networks is also improving. So we are very positive on ICICI Prudential, and one of the biggest reason is also because the value of new business. Management had earlier guided in FY19 that they will double the value of new business by FY23. And which will, they are on track to deliver that. And so that is the most encouraging part, the strong growth guidance. Yeah.
Okay, Neha. Thank you so much once again for joining us and for giving a, deep dive into what's happening in the insurance space and which sectors, or rather which companies to keep on your radar ahead of the mega LIC IPO, which opens next week. Let's welcome in Shrikant Chouhan from Kotak Securities. Shrikant, thank you so much for taking time out. All of our viewers were eagerly waiting to send across their queries and questions for you. But before we do that, let's see which are the stocks that are in the spotlight. First up will be Axis Bank, of course, a big earnings candidate to watch out for in today's trading session. Street is expecting solid growth in net profit. Interest income is also likely to be pretty resilient this time around. However, operating performance is likely to be a tad muted. But let's talk technicals, Shrikant. How is Axis Bank positioned ahead of its Q4 report card delivery?
Yeah, good morning, everybody. I think, all these financial stocks are trading below their important resistance levels. But if we compare them with other stocks, then they are outperforming. They are just correcting from the highs. And Axis Bank was also it was trading somewhere close to 800 levels, 790. From there, now it is correcting back to the important support areas. But close to 740, 745, the stock is having very good support, and it has spent a lot of time close to 740, 750 levels. So today, in case if we see any drop close to 740 or 745 area, then there certainly we should look for adding long positions. We are expecting eventually the stock to perform, but in the short term, we are expecting stock to remain in a range of 740 and 790. So if there is any correction, then certainly we should be buying.
Okay, all right. How about Bajaj Finserv? I mean, it's also one of the big boys that's going to be coming out with its report card today, and definitely a lot of traction. Bajaj Finance, we saw a good set of numbers being delivered a couple of days ago. Is Bajaj Finserv also looking strong?
See, for Bajaj Finserv, the problem is that whenever we see some sell-off in Bajaj Finance, we see equal amount of weakness or a little bit more weakness in Bajaj Finserv because it's a high beta stock and it's a holding company also. Insurance stocks are also finding some difficulties to sustain at higher levels, but after the result of HDFC Life, I think all these insurance companies to find some bottom. Based on its overall price pattern, 14,500 should act as very good support. In fact, below 15,000, the stock is having multiple supports close to 14,600, 14,500, and 14,400. Broadly, we are of the view that the stock has already fallen to its important support areas, and today, because of some weakness in the equity market and because of the expiration of monthly contracts, if we see the stock is dropping to the levels of 14,500, then there we should be buyer with a short-term view. If there is a medium to long-term view, then certainly we should be buyer because currently all these stocks are finding resistance or some profit taking at higher levels, mainly because of the valuation concerns. But the growth and the visibility of the growth is very clear. And broadly, we are of the view that if there is a medium to long term view, then certainly we should look for adding this type of companies on dips.
Okay, lots of questions also coming in as far as the banking space is concerned. I'd like to address Anandita Singh Rathor's question. She wants to know what is a good price to dip into HDFC Bank. This has clearly been an underperformer if we compare it to the likes of ICICI Bank in terms of price move. Largely range bound for the last 1 year, down by about 7-8% if we compare it to where it was perched around the same time last year. Talk to us about investing in HDFC Bank right now. Is it a good idea, or should one perhaps expect a further, degrowth in the stock price where one can enter?
No, I think even at current levels, it's a very strong candidate to buy and hold. The reason is because fundamentally also we are expecting stock to move towards 1650, 1670 sort of levels in next 12 months of time, which is decent upside when the scenario is highly uncertain. At the same time, technically also, if we go through with the chart pattern of the stock, then the stock has spent almost 1.5 year below around the levels of 1400. Even though there was spike close to 1700 levels or 1650 levels, we saw equal amount of correction, and finally the stock settled most of the time close to 1400 or 1350 levels. In today's date also, the stock is available at 1350, 1370, which is quite attractive, and I'm not expecting stock to sustain below the levels of 1300 so easily, unless and until something goes really wrong in the market. So broadly at these levels, it's a buy with a target of 1650. Technically also, we are expecting stock to move towards 1500 in the near term.
Overall bank Nifty also year to date has been fairly quiet, just 1.5% of an up move that we've seen there. In fact, one of our viewers is also asking for your views on bank Nifty. Gurunath Holkar has posted a question on our YouTube feed. So what is your assessment of the chart at the moment?
See, for the bank Nifty, it always follows to the broader pattern of Nifty. And if the Nifty is going to spend some more time between the broader range, bank Nifty is not going to outperform. Yes, in the very short term, we can expect some activity, but in the medium to long term, I'm to say, if we consider the view of next 1 month, then it is going to follow the broader trend of Nifty, and where we are seeing range bound sort of activity. No doubt, again, we are seeing corrective pattern because we saw spectacular rally from the levels of 15,600 to 18,100 on Nifty, and in bank Nifty also we saw rally from 31,000 to almost 39,000, 39,500. Now the bank Nifty is holding about the 50% retracement level of 35,500, which is technically positive, but it is still far from current levels. So today, if we see any drop close to 35,500 levels, then there we can take some contra bet because markets are oversold in the short term. If we consider the pattern of last few days, 4-5 days, then the markets are oversold. So if there is any drop after opening immediately to the levels of 35,600, 500 levels, then there we should be buyer. But if it is opening at an unchanged levels, then till the bank Nifty is not crossing 36,300, we are not going to see any major firework. In fact, there one can take short trade of going short on the bank Nifty, contra trade of going short on the bank Nifty with a stop loss at 36,300.
Okay. So let's keep it to some more queries coming in on the financial space. HDFC AMC is one of our viewers queried. One of our Twitter viewers has posted this question to us. His question is, what is the view on HDFC AMC? The name of our viewer is Srinivas. He's written to us on Twitter. HDFC AMC has also, most of the HDFC group stocks, has been an underperformer. Significantly off from its 52-week high of 3,400 odd rupees, right now perched at 2,075. Good idea to buy at these levels given the correction it has seen from its 52-week high, or do you see further pain in this counter?
No, I don't think so that the stock will fall much from current levels. The reason is because it was around 3,400 levels. From there, all the way it has fallen to 2,000. And even if we consider the broader pattern of the stock, then the stock has found multiple support during the period of pandemic, close to 2000, 2020 sort of levels. So since March 2020, the stock has not performed heavily, but yes, it remained in a range. And today also the stock is very close to those levels. But yes, if there is, if like really that investor or trader want to invest in the stock of HDFC, then it's fine. Then one can invest even at current levels because we are expecting broader investment sort of activity in all the HDFC stocks, because most of them are available at attractive valuations. We are expecting activity in HDFC Bank, HDFC Limited, as well as HDFC Life and HDFC AMC. But it is better to focus more on those companies which are parallel to the index. So HDFC Bank is much more better investment pick to buy and hold instead of buying and holding HDFC AMC.
Okay. Just one more query from the banking and financial space. ICICI Lombard, Dr. Sujan Naik has posted us that what is a good level to enter the stock right now? Even this has actually been quiet here to date. 1,300 odd levels is where it's trading at right now. Do you think it provides a good entry point into the stock?
I think if really somebody want to focus on the insurance sector, then ICICI Prudential and HDFC Life looks really good. For ICICI General Insurance, we have view that it is going to spend some more time between the very narrow range of 1,500, 1,550 on the higher side and maybe 1,200 on the downside. So we are not expecting any major firework, but the stock has most of the time, whenever the stock has fallen, it has found very good support close to 1,200 sort of levels. So currently it is around 1,320, and we are not expecting any major activity on index also. So in case if there is any correction, then close to 1,200, 1,230, we should be buyer in ICICI Lombard.
Shrikant, another stock that we are closely watching out is Ambuja Cements. Today they're going to deliver their Q4 earnings, but another big reason that the stock has been in the limelight is the fact that Adani Group, according to reports, is in advanced talks to acquire Ambuja Cements from Wholesale. And look at the way the stock has run up. 32% gains in the last 1 month. What is, the way forward for Ambuja on the charts? Is it likely to stay this strong, or there could be perhaps some correction where people could look at entering in the near future?
I don't think that the stock will correct so easily, because there is price as well as volume breakout sort of formation. Unless and until something like really comes adverse for the stock, or crude prices goes to 120 sort of levels, stock is not going to correct. It is holding well above the mark of 370, 375, where it has spent a lot of time in the current upmove. And in the past also, whenever the stock has fallen, it was consolidating above the levels of 360, 370. When the crude was around 130 sort of levels, that time we saw sharp sell-off in almost all the cement companies, and that time the stock has fallen to 280 sort of levels, but most of them have recovered from lower levels. And Ambuja is having next resistance close to 410 or 420. So from here, still there is at least 8 to 10% sort of upside is there based on technicals. Based on its short-term pattern, 370 would act as very good support. So if there is any correction because of any reason close to 370, then there certainly we should be buyers.
Okay. Let's also, since we're talking about earnings candidate, Vedanta definitely merits some attention. How does it look on the technical front?
I think Vedanta has already reached to its extreme level of 440, 430, 440 sort of levels. Now it is going to spend some more time. Today, on the back of this sudden rise in the dollar index, it was around 102. From there, now it is trading above the levels of 103, which is most of the time turns positive for metal companies. And maybe because of that, we are going to see some more activity, some more action in all the metal companies. That's the broader view. That is what we correlate most of the time. The stock has fallen to the levels of 400 and it is finding support close to 400. But we are not expecting stock to surpass the level of 440 so easily. So I think it is going to spend some more time. If there is a very short-term view, then one can look at stock with a stop loss at 400.
Okay. Well, lots of queries trickling in, Shrikant, and we better get to addressing them real quick. Amitava has written to us and wants to know your view on Adani Wilmar. I mean, it's a relatively new entrant to the markets. I don't know if you're, if there is enough history for you to predict which way is it headed.
No, it is just going up and up. It opened somewhere close to some 250, 270 sort of levels. After spending some time between the levels of 400 and 380, it moved to the levels of now almost 800, 850. There is hardly any price pattern that the stock has established. But while looking at the overall activity in the group, I think Adani Wilmar is going to gain some more attraction from investors. And its price pattern and volume-based pattern is indicating us that and because it's a trending stock, it is not correcting at all. If there is any correction, then again the buyers will come to invest or to take advantage of that corrective move. So close to 700 or 650, the stock is having very good support because there the stock has spent some time. In case if there is any correction, then we should be buyer close to 700, not at correct levels.
Okay. Let's shift gears and talk about what's happening in the IT space. We had a detailed fundamental discussion earlier this week on how IT looks strong for the long haul. But from the near to medium term standpoint, one of our viewers is asking, his name is Vatsal Srivastav, what correction levels can we expect in IT stocks? Any of them that you are closely watching out?
See, IT stocks have fallen sharply and they are not recovering, even though there is some recovery in the market from lower levels. In fact, they are finding selling if they are bouncing from lower levels. So what it means that someone is taking profit or someone is liquidating overexposure, and that's the reason IT stocks are correcting. But if there is a medium to long-term view, then these are the levels where one should be buyer. Because in the past, most of the time we saw that when we saw sell-off in the metal stocks, eventually they recovered. Auto stocks are recovering from lower levels. Mahindra & Mahindra, which was around 650, 660 sort of levels, or Tata Motors, which was around 100 levels, now is putting at 400. So similarly, we are specifically bullish on the IT sector, but they are correcting right now. I think it's an opportunity to certainly invest with a medium to long-term view, and we see with a view of next 3 to at least 6 months. We should be buyer in stocks like HCL Technologies, Tech Mahindra, as well as Infosys. We can expect some 7 to 8% sort of correction in the stocks because the overall space is under some liquidation pressure. But 7 to 8% is like decent if correction, if they correct from current levels, because upside is still there, nearly 20 to 25%. So that time the investment scenario will be more and more profitable for the investors. But even at current levels, one should start buying in tranches with a view to add more if there is any correction. And we are bullish on Infosys and Tech Mahindra HCL Technologies.
You know, another favorite of the street is Titan and Company. Arindam Bhattacharjee has written to us. He's asking, is it the right time to enter Titan Company and Tata Consumer? Titan did make a fantastic, uptick in the last, I think in the month of March when they made a fresh 52-week high. But since then, the stock has been relatively quiet, still trading at very good levels, close to 2,500 rupees a piece. Tata Consumer as well, on the other hand, is one of those FMCG players, and the entire FMCG pack has been actually a quiet mover of late. So any of these two counters that you would like to recommend entering into right now?
I think if there is a long-term view, then certainly we should be buyer in Titan at current levels. The reason is because the stock is into uptrend. It spent time at the highest trading range, and then again it enters into the fresh uptrend. This time also the stock has spent a lot of time close to this 2350, 2400 levels, and it is finding resistance around 2700. But while looking at its overall pattern and the way the company always reports numbers, they are very clear in giving their numbers and the projections. Broadly, we are of the view that this trend is going to continue, and this type of companies are going to attract some more attraction from investors in the long term. At current levels, certainly it's a buy because the stock is very close to its support areas of 2300, 2350. But if there is really somebody want to buy on with a long-term view, then one should be buyer at current levels partly, and balance one can look for adding if there is any further more correction.
Okay, all right. Lots of other queries are coming in, and clearly there's a lot of interest in the IT space, in the petroleum space, but we're unfortunately out of time. So I'd request our viewers to come back in tomorrow again, and we'll try and get your queries addressed. But Shrikant, thank you so much for taking time out and for chatting with us about a host of sectors, stocks, earnings candidates, and all the trends that you need to watch out for the benchmark and for Bank Nifty. Thank you guys for tuning in. We'll be back tomorrow again at 8:30 a.m.